Well, good morning. It's been a very busy 24 hours in the world of finance. We've seen a 25 basis point cut from the Reserve Bank that's been fully passed on by the banks. And we've also had the 2016-17 budget. So what do we make of it? Well, there were cuts to company tax, which will help. They weren't large, more is expected down the track. But what they have done is they've widened the definition of what a small business is from revenue of 2 million up to 10, which means more companies that employ more people will be able to take advantage of those tax cuts. Also within the company sphere, assistance for startups was mentioned, particularly in the innovation package, so that might help a few folk out there. So company taxes will assist. They weren't large. It's a pay for that. They're going for the big end of town, for the multinationals, trying to crack down on tax evasion in that part of the world, which is a good thing. What else was there? Well, there were personal tax cuts for some. Didn't amount to a lot. If you earn over $80,000, it's $6 a week. Yes, they've had their tax cuts, but the wealthy are seeing changes to superannuation. The concessions are being reduced, taxation on contributions is being increased. So whilst they might get a $6 tax cut, they may well be paying more in terms of their superannuation and the tax that's being paid on that. There were some other things in the realm of superannuation, some good things, particularly for part-time workers and for women, allowing them to top up their super to catch up from times when they weren't in the workforce. And for those towards the bottom end of the wages spectrum, there'll be some give back of the tax that they've paid, because at present they're penalised in tax terms for putting into super, which is grossly unfair and is now being fixed. So was it a real a plan for jobs and growth? Well, marginally positive, not overly inspiring, but helpful to some. And I hope it is helpful to you and to your clients. Thank you.